for the tens of millions of gig economy workers. All that and more over the next 2 hours. First up, though, a check on the day's trade and top business stories. Here's Charlie Pell.
Hi, thank you very much, Tim. It's getting ugly with the Dow, the S&P, NASDAQ all declining right to the numbers here. We got ourselves some fast-moving markets on this Thursday ahead of the jobs report. The Dow now down by 418 points. That is a drop right now of 1.1%. Got to keep in mind that for much of the day we had stocks solidly in the green. The S&P now down by 42, a drop right now of 0.8%. S&P had been up by 1%. NASDAQ down 123, a decline right now for the NASDAQ Composite Index of 0.7%. 10-year 4.30% with a 2-year that's yielding 4.64%. Gold up $3 the ounce to $23.03. That is a gain of 0.1%. And West Texas Intermediate crude up 1.3%, 86.56 a barrel. A barrel of Brent crude, by the way, up by just about 1.5%, trading at $90.66 for a barrel of Brent crude. So stocks have raised gains as a rally in oil amid heightened geopolitical concerns weighed on Wall Street sentiment ahead of the jobs report. Now, as for the Fed and when we might see some rate cuts, Megan Swiber is director of U.S. rate strategy of BofA Securities, and she was interviewed this morning on surveillance.
You have a Fed that's guiding the market to cut, but this real question and what Powell was alluding to yesterday is they really don't know the level that they're going to cut rates to. A lot of questions around what that neutral rate is. It's a really abstract concept, but it's this idea that the Fed's hiked so much already, and we're really not seeing much of that cooling in economic activity.
Megan Swiber of BofA Merrill Lynch. Alphabet reportedly talking with financial advisors about potentially making an offer for HubSpot, an online marketing software company. Right now, we've got HubSpot shares trading higher by 5.6%, Alphabet down 1.9%. Recapping, S&P lower by 0.8% right now, the Dow down 1%, NASDAQ after earlier gains down 0.7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Really do appreciate it. Worth mentioning, once again, we've seen stocks turn lower. The S&P 500 now down close to 0.8%. The NASDAQ down just about the same, while the Dow down a full percentage point. For more on the reversal that we saw just in the last hour, let's bring in Bloomberg News Chief Markets Correspondent Abigail Doolittle here in our Bloomberg Interactive Brokers studio. Abigail, when I saw you this morning, I said, oh, we're looking forward to chatting with you. People are buying stocks today. Quite a reversal. What happened?
This is the kind of day that we like because we have something to talk about. Earlier, we were also chatting about how things were a little bit too smooth, that sometimes things go farther and longer than you can think. And now here we do have this reversal. Interestingly, we all know, or a lot of us know, that I like charts and technicals. We have the NASDAQ 100 hitting down on its 50-day moving average for the first time basically since last October. Speaking of which, the S&P 500 right now down 1.6%, the worst week since October. So this selling pressure, if it continues into the close and is not moderated by buying tomorrow, or is even worsened by more selling tomorrow, it could be the worst week of the year. Now, there are two things going on, I believe. One, we have a ton of Fed speak, and in particular, Neil Kashkari talking about the idea that maybe there's no rate cuts this year, which from my perspective seems pretty reasonable. I mean, the economy
Torsten Slok told us this a month ago.
Exactly, and it seems, from the standpoint of the economy being pretty solid, but also technically when we think about it, and we've talked about this before with the presidential election, I mean, they really have to do June, July, September. I mean, they could do June, July, December, but just with the politics of the presidential election, they probably want to stay away from that. And then, of course, tomorrow we have the jobs report. So investors just seem to be a little bit nervous ahead of all of this. But they've been nervous, I would say, for the entire month of March. If you were to take a look at the NASDAQ 100, it's basically been in this tight range. A range is a battle between the bulls and the bears. It doesn't really matter until it breaks. The question is, will the bulls take it or the bears take it? We still don't know, despite today and despite heading to the worst week of the year.
And with the S&P 500 coming off its first back-to-back double-digit gain in a little bit over than a decade, when you're looking over at what's happening with chip stocks today, looking specifically at the SOX, so the Philadelphia Semiconductor Index, I mean, that's down now more than 2%, but it had been higher earlier this morning. What's going on there?
Yeah, it's interesting to see that because, of course, yesterday morning in the pre-market, we had chips down severely on the worst earthquake Taiwan had seen in 25 years, and TSMC briefly closed their plants. Production resumed there, and so then you saw an upsweep for the chip stocks. Today it's interesting to see this. I think a lot of it, I mean, if we think about NVIDIA, that's the worst point drag on the S&P 500 right now. It's not down tremendously, but it is down 2.2%, followed by AMD down 6.5%. I think that too far, too fast could be a piece of it. I think that's probably one of the main factors going in there. It just seems as though investors are a little bit anxious right now. It feels like there's emotion out there as opposed to knowledge.
What about oil? During our 2 to 3 show, we saw a redhead that said that Brent crude had hit $90 a barrel for the first time going back to October. What kind of anxiety does
Absolutely,
that
that's a great point, and I should have mentioned that. That's a great point because that is an indication of the possibility of inflation. If oil doesn't go back down, the Fed might be eating its words, or at least Fed Chair Jay Powell. Neil Kashkari, I guess, would be in Torsten's Lock, not of the Fed. But that may give reason, say if gasoline were to rise and then move through the system, that would be reason for the Fed at some point to say, well, we're data dependent, because everything they say is conditional logic. So if all of a sudden the data comes in and oil trading higher, or say it were to go, WTI were to go above 90 as well, and then higher and hold in the summer driving months, that could be data that they would say, well, we didn't know that was going to happen. Because of this, now we're not going to be able to cut 3 times, only 2 times, 1 time, or maybe they join Torsten Slok and Kashkari in no times. We don't know that. That's speculation, but I do imagine that's in the calculus of investors' minds right now.
What I wanted to know and pick your brain about is just looking at the new lows list. Really hasn't been climbing well off of its highs back in October. And that's more specifically when I'm looking at the 3-month list there. So mathematically, wouldn't you have to see more names on that list in order to see any sort of meaningful correction?
Well,
it's
market? Interesting. I'm not taking a look at that list, but you're reminding me of something else, Jess, which is the number of members above the 50-day moving average for the S&P 500. So in the 50, there's so many bearish divergences on these indexes. It's unbelievable. Last year and I'm unable to see, I'm trying to find this very quickly to give the exact numbers, but in any case, fewer members are above the 50-day moving average on the recent highs than last year on several occasions. It tells you weaker hands are buying. We also see similar divergences that we've been talking about for weeks with the RSI momentum indicator, lower highs. So the recent highs that we've been having, they're made on less bullish momentum, less enthusiasm. I would say that you have a lot of smart buyers back in the day, back in October of 2022 and 2023, who are selling to maybe less smart hands now. And of course, we love Apple.
I was just going to ask you about Apple.
Right.
Yeah. I mean, it's still in the green today, but
the
just
technicals
barely now.
on Apple, though,
the
close to
technicals
that
on
intraday low in October.
Yeah, I mean, you can make the case that there's a possible, because it hasn't confirmed yet, but massive bearish double top, which would suggest that Apple's going to really go down. We, of course, have, I think it would suggest 140. Let me pull it up before I actually confirm that. But we have earnings season ahead.
That's
so
right.
Apple, we've been having all these bearish reports on the iPhone and in particular to China. So I'm just taking a quick look here at Apple 200. The low is 165. Yeah, so you could be looking at a move down toward like 130, 120 easily on Apple on this pattern.
And then the S&P 500 would follow.
It's hard. It's amazing that the S&P 500 and the NASDAQ 100 have held in so well, given the fact that it's the second biggest component. But you have the Microsofts, you have the Googles, you have the NVIDIAs, yes, that are out offsetting it. But if the sentiment is to change, I mean, it's going to be interesting actually to see what big tech, what those earnings are. Plus, maybe at some point we're also going to see some kind of a rotation out of big tech and into, commodities have been, to your point on oil, have been on fire recently. So if money comes out of some of the big tech names that have been doing so well and broadens out, but the problem there is that is so much of the tide, big tech, that if that tide goes down at some point, it's going to hurt those other tides as well, except for very specific idiosyncratic investment areas.
NASDAQ 100 with a range of up 1.1% today, all the way lower to down 1%.
Well, that speaks to that emotional. That does not speak to certainty, for sure. And when you start to have intraday volatility like that, I wouldn't be surprised if we finish kind of flattish on the day, because a lot of times when big intraday volatility starts to be introduced into the markets, that's what happens by the close. But then a few days later, a few weeks later, then you see that kind of volatility on the closing basis.
Bloomberg News Chief Markets Correspondent Abigail Doolittle. We have about 50 minutes until the close, so maybe some more volatility between now and then. Thanks so much for joining us in our Interactive Brokers studio. This is Bloomberg.
That's when I need some information. Where did she come
All right, Tim, so when you think of NVIDIA and Microsoft, definitely the poster childs when it comes to the AI frenzy. But as you know, there are many others that have been trying to scale AI for well over a decade. So it might surprise you, maybe not, but wireless carriers like Verizon. So the excitement over AI is happening at the same time as the rise of 5G. So while this may surprise people, Verizon's AI engines actually ingest more than 70 billion data points off the network every single day. And that kind of massive volume does provide a big opportunity in powering AI models, but it also comes with a host of challenges. So joining us now in the Bloomberg Interactive Broker Studio is Craig Silliman, president of Verizon Global Services, to chat with us on how the company is using AI, automation, and robotics to tackle labor challenges. Thanks so much for joining us. It's great to have you here. How are you?
Thanks, Jess. Great to be here, and Tim. Appreciate you inviting me.
Well, walk us through this when it comes to Verizon and sort of the parallels when it comes to what your company has been doing over the past decade in relation to AI and also 5G and what this means really moving forward.
Yeah, absolutely. As you mentioned, everyone right now is talking about generative AI, right? That's the thing hitting the headlines. But AI has been around for a long time, and we've been working with AI now for more than a decade. We have more than 36 AI use cases in production in our customer service centers, in our stores, in our supply chain. So we've been working on this for a while. We continue to refine, we continue to improve it.
So as a customer of Verizon, whether I'm a Fios customer, whether I use Verizon for Business, whether I use Verizon Wireless, how am I seeing the manifestation of these investments in AI?
Yeah. First, thank you. I hope you are a customer, Tim, so thank you for that.
Not of Verizon for Business, but yes of the other two.
So thank you. We'll keep looking to win you over. You know, you're going to see it in a number of ways where it may be transparent to you. And in fact, if we do our job well, it will be transparent to you. What we're trying to do constantly is use AI to take work away from our employees that's more tedious or that's not high value add for you, the customer, so that they can focus on you. So we want our employees doing the things that humans do best and let the AI do things that they do best.
Would it be customer service at this point? If I call in or use a chat?
Absolutely. So if you call into our customer service reps today, in the background, we're going to have a number of AI use cases going on. First of all, we have intelligent call routing so that we know what you're calling in about and we can match you with an agent with the skill sets best matched to serve your needs. Secondly, as you're talking to the agent, the AI is serving up in real time information for the agent about what they need to answer your questions.
So the AI is listening to my voice and sort of perhaps coming up with answers to questions that people who've spoken things similarly to what I'm speaking have asked about.
That's exactly right. And if you think about the number of permutations, the number of devices we sell, the number of plans we have, there are hundreds of pages of material available to our customer service agents to answer your questions. We don't want them going through that while they're trying to listen to you. So the AI will get there and synthesize it for the agent so they can get very quickly to exactly the answer that you need. So what you're going to see as a customer is quicker time of response and more relevant answers to your questions.
So does this basically sidestep even if you have some maybe simple questions where you don't end up having to talk to a customer service rep and you can just use the AI to get the answers that you want?
Yeah, great question, Justin. And as we continue to evolve the models, what we want to get to is that you can interact directly with, we all have chatbots today, but we want to make those chatbots far more robust so they give you a more relevant answer. But of course, once you're interacting directly with an AI as a customer, we have to make sure we get that right? We take very seriously our responsibility to our customers. We all know the stories about AIs that have gone rogue, and so we do a lot of testing to make sure that we get that right before you're interacting directly with an AI.
We've talked to our own Mark Gurman a lot about, he's chief technology correspondent here, writes a lot about Apple, breaks pretty much every big story about Apple, about how a company like Apple is going to start using AI in handsets. Look, Verizon Wireless is a huge part of your business. How are you thinking about the hardware side of this, the side that you don't control, and what that means for your network when there is AI in our handsets used in real time?
Yeah. Obviously, all of the device manufacturers are big partners of ours, so we're in constant conversation with what they have coming out. But more from our perspective, as we think about the network, there are a couple aspects of AI. First, you just mentioned this stat. We're ingesting 70 billion data points off the network every single day and running those through analytics engines so that we can not only do kind of descriptive analytics, what's happened, and diagnostic analytics of why did it happen, but predictive and prescriptive analytics. What's going to happen next? Where do we see the growth in the network? Where do we need the engineers getting ahead of the build? So we're using AI to make sure the network stays ahead of the usage, but we're also looking at use cases as all of us as consumers use more and more AI. We expect that to drive further usage of the network.
Can you expand more about specifically the data points when you're talking about 70 billion? Where are you getting that data?
Yeah. So every time you're walking around, driving around the streets, your device is constantly communicating with the network. And what we're looking at there on an aggregated basis, it's not personal to you.
Okay.
But
That's what I was wondering.
Don't worry, no. But an aggregated basis, we're
Jess,
looking...
you spend a lot of time at the office.
You work way too much. We're figuring that out.
Tell my bosses.
Yes. No, this is on an aggregated, anonymized basis. But the data sessions, how are you communicating with the tower? Are we seeing congestion? Are you seeing certain parts of the times of the day that certain cell sites are getting more congested so that our engineers can get out ahead of that and build out capacity? Things like that. Are we seeing certain usage patterns that are driving changes in the network? And we've seen that over the last couple of years, changing usage patterns as through COVID drove a lot of that, shifts from urban environments to more rural, and that helps us get ahead of the build.
At the end of the day, does any of this matter for customers, for customer acquisition, for getting more people to sign up for Verizon service?
Absolutely, because customers are looking for reliability in their connection. We all live our lives on these devices. We run our businesses on these devices. So we're all looking to say, how reliable is this? So our ability to get ahead of the build and make sure we're meeting customer needs before you ever know that need is there will absolutely lead to customer acquisition.
What's the top question you get from customers related to this right now?
The top question is probably, can you do away with customer service agents altogether and just go to AI?
Really?
I get that
They don't
question
want
all
to
the
talk to
time.
people?
Well, actually, it's a great question, Tim, but actually, no, they ask that more in a worried way. They're worried that we're going to move completely to AI.
Right.
Oh,
And
I
so
see,
what
yeah.
we're saying is we really don't see that. We see AI as an assist to our employees, not a replacement. It makes them more effective. It lets them focus on the most rich human parts of their job. And we think that'll be good for customers because customers want someone with empathy who's listening to them, but who's assisted by all this great new technology.
I do not want the humans to be gotten rid of. I promise you that. Craig Silliman, president of Verizon Global Services, here in our Bloomberg Interactive Broker Studios. The S&P 500 down 0.9%, as is the NASDAQ Composite. You're listening to Bloomberg Business Week.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. Lows of the day right now on the S&P 500 index. 39 minutes to go ahead of the closing bell. The S&P right now down by 43 points to 51.67. That is a drop now of just about 0.8%. Stocks erased early gains as a rally in oil amid heightened geopolitical concerns weighed on Wall Street sentiment ahead of the jobs report tomorrow morning. Dow Industrials now down 422 points for the Dow, a drop there of 1.1%. NASDAQ lower by 132 points for NASDAQ, a decline of 0.8%. We've got the 10-year yielding 4.31% with a 2-year 4.65%. Spot gold down 0.2% at $22.96 the ounce, while West Texas Intermediate crude up 1.4%. 86.59 on WTI. Barrel of Brent at 90.77. Brent, the global benchmark, up by 1.6%. McDonald's has agreed to acquire its restaurants in Israel from operator Al Yal, bringing the local chain in-house months after it became a point of contention in the early days of the Israel-Hamas war. McDonald's declined to comment on the rationale for the acquisition. McDonald's shares down now by 1.6%. Again, recapping steep losses for the U.S. stock market. S&P down 45 right now to 51.66, a drop of 0.9%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Well, Dave Calhoun took over in January of 2020 for ousted Boeing CEO Dennis Muhlenberg, who downplayed design defects that killed 346 people when the Max's flawed software crashed 2 planes. Yet 4 years later, Calhoun is out. In addition to losing more than $23 billion during his 4 years as CEO, Boeing lost the trust of flyers, the patience of airline customers, and the indulgence of regulators. As our next guest writes, now that Calhoun is leaving by year's end, Boeing has also lost the fiction that Calhoun was ever the right leader to fix the company. And over the long run, that could be a good thing. Peter Robison is projects and investigations reporter for Bloomberg News. He's also the author of the New York Times business bestseller Flying Blind, the 737 MAX tragedy, and the fall of Boeing. Peter joins us here in the Bloomberg Interactive Brokers studio. His story, by the way, co-written with Julie Johnson, and it's featured in the new issue of Businessweek magazine, available now on newsstands, on the Bloomberg terminal, and at bloomberg.com/businessweek. Peter, good to see you here in New York. Usually you're out in Seattle, so awesome to have you here. This piece, not just a great overview of Calhoun's failed time at Boeing, but also a history of really where the problems at Boeing began. But what I want to talk about is that key decision back in 2011 when the company decided that instead of building a brand new airplane, what they were going to do is re-engineer a 737 for the 4th time.
Yeah, it is a really key moment, and it's what set off what we're seeing now, which seems like a recent implosion. But and Boeing really had this same choice even back in the 1990s. At that time, Airbus had stolen a big order, and one of the things I write about in my book was a meeting that Boeing held, and it was a meeting at that time to say, should we match the A320? The A320 has some advancements in the cockpit that provide more integrated electronic features to the pilots, and the cabin is wider. And Boeing said at the time, I talked to one former exec at Boeing, Gordon Bethune, who also ran Continental, and he recalled that he thought to himself, maybe we should get a jump on Airbus here and get ahead of this. And he was leaning toward voting for an all-new plane, but he knew that the manager of the 737 factory didn't want that. It's hard to update a factory. There's all these sunk costs in tooling. So he voted for doing an update at that time, and the vote was 5-3. Boeing did an updated 737, and then again, as you said, in 2011, Americans stole this big order, and Boeing faced the same choice. It had just come out of a very expensive development project on the 787, and didn't have much appetite for an all-new plane, and so it went with the updated 737, which has not proved a sales success, and that's an understatement against the Airbus plane.
Walk us through that key decision back in 2011 and how we got to where we are now.
There were meetings held in the summer in Dallas secretly with Airbus execs and American Airlines execs, and they met at a hideaway hotel in Dallas where they didn't think that Boeing's on-site sales rep would see them, and they successfully negotiated a big deal for A320s, and that was a huge coup for Airbus because it was a takeaway for Airbus. They didn't, at that time, American Airlines didn't have A320s. Boeing was surprised. I understand that the head of Boeing Commercial Airplanes was upset that his on-site sales team didn't warn him about this, and Boeing had publicly said it didn't. There was no pressure to do an all-new plane. It could get to that. So Boeing reacted by making a short-term decision, which allowed it to hold on to market share. But in the long run, as we're seeing, it's cost Boeing quite substantially.
So we get here to 2024. By the end of the year, Calhoun will be out, or perhaps sooner if they do come to an agreement. I guess the board has to decide on a new CEO. To what extent is a new plane that would compete with the Airbus A320 in Boeing's future? Something that's completely a brand new plane.
But Boeing had at one time, even late in Dennis Muhlenberg's tenure, Boeing had a plane called the new middle market airplane on its drawing board. It would go right after the center of the market, the bread and butter routes that a lot of us fly on, and it with the MAX crisis after 2 crashes pulled away from that. Really the debate now is between continuing the same strategy, which is cut costs, eventually return cash to shareholders, or invest in new products. Boeing has really slowed its pace in product investment. So a number of analysts, one of them is Bank of America's Ron Epstein, says that it would be costly, but in the long run, it would be beneficial for customers. It would be beneficial,
like $25 billion
or more, and
wow.
But investors would hate it. But over the long run, they're going to hate even more Boeing steadily losing market share to Airbus.
How does Boeing fix this?
The people that I've talked to say it really starts with fixing the culture to be more about collaboration. There's a real tension at Boeing between speed and efficiency, which has been a focus of their managers who often come from the GE School of Management, and safety and doing things right. And many people I've talked to say that Boeing in the old days had multiple layers. They had multiple checkoffs. There were coordination meetings that added costs, but there was a recognition that over the long run that would save money because it will be done right, and you wouldn't have to go back into the airplane and fix things later.
Well, one of those executives from the Jack Welch School is, of course, Calhoun, Dave Calhoun. And one thing that was interesting to me and big takeaway from your piece that's in the new issue of Bloomberg Business Week is the difference in the way that he talked about regulators publicly, and especially in recent months, versus what he did behind the scenes. Can you talk a little bit about what you've learned about Dave Calhoun over the last 4 years and the way his management style was portrayed?
Yeah, I thought that was interesting to read as I was looking at the history of his statements on regulation versus what he said immediately after the crash. Immediately after the crash, he spoke to employees and encouraged them to be very open with regulators. He said, "I trust every step they'll take."
Is this the January panel?
This is after the
two 737 MAX crashes.
He was on the board for the crashes. So this was after the panel. This was soon after the panel blowout in January at the 737 factory, and he pledged openness and trust of regulators, but. Over the years in his career, he had said something very different. He gave an interview that I mentioned in the story with Maria Bartiromo on Fox Business in 2016, where he said it was a conversation about government regulation and taxes with the theme that it was hammering business, and he said it's just not helpful. I view governance in general as just slowing everything down. And there was also a meeting in November 2022, and he talked about just the fact that and he was recognizing that Boeing was in a different moment and needed to be open with regulators, and he said let them do all the discovery they need, no matter how inefficient you think it is. So it felt like he was revealing a bit of his thinking there.
When you think of the two biggest companies when it comes to aerospace. Obviously, you have Boeing, but then you have Airbus. Where's Airbus at this point as a competitor when you have the top two there?
Airbus has become what Boeing was when I first started covering aerospace in the late 1990s. Airbus has 60% plus of the commercial market. It is in narrow bodies, as we talked about, just really, putting Boeing behind. One analyst I've talked to said that if in a natural market, if Airbus wasn't constrained by delivery slots, the market share might be 75-25 Airbus. The A320 is just the preferred narrow body at this point.
How damaging, we have 30 seconds left, how damaging is this whole debacle to its customers, which I remind everyone are the airlines, not us?
The customers are suffering because they can't put on the extra flights they were looking for, so it's costing them.
United is having to do. It's pretty wild.
Yeah, traffic is back, but the airplanes are not.
Hey, Peter, a great piece, co-written with Julie Johnson, who covers aerospace and airlines as well, and Boeing too. It's in the new issue of Business Week magazine. It's available on newsstands, on the Bloomberg terminal, and at bloomberg.com/businessweek. Peter Robison is projects and investigations reporter for Bloomberg News. He's also the author of the New York Times business bestseller, Flying Blind, the 737 MAX tragedy, and the fall of Boeing. Taking a look at markets, we are seeing a leg lower for the S&P 500, down more than 1%, the Dow down 1.2%. Let's get a check on the latest world and national news with Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. President Biden spoke by telephone with Prime Minister Benjamin Netanyahu today. Biden emphasized the strikes on humanitarian workers and overall humanitarian situation are unacceptable. National Security Council spokesman John Kirby was also asked about the consequences for Israel if they don't make concrete, tangible changes.
What we want to see are some real changes on the Israeli side. If we don't see changes from their side, there'll have to be changes from our side, but I won't preview what that could look like.
Kirby says those changes include a dramatic increase in aid moving into Gaza, additional crossings into the region opening, and reductions in violence towards civilians and aid workers. Biden had told Netanyahu that any future U.S. support for the Gaza war will depend on any new steps to protect civilians and aid workers. No Labels is dropping out of the 2024 presidential race. The group, which aimed to field a third-party presidential bid, abandoning efforts now to create a unity ticket this election season. This after the death of its founding chair, former Connecticut Senator Joe Lieberman. Sources tell Bloomberg that advisors to President Biden have called major Baltimore employers like Amazon and Home Depot to encourage them to retain jobs despite the bridge collapse that shut down the Port of Baltimore. White House Chief of Staff Jeff Zients and top economic advisor Lyle Brainerd have phoned executives from large retailers and distributors, reportedly asking them to not dismiss workers and assure their employees that their jobs are safe to help provide certainty for jobs markets. A judge in Georgia says alleged comments by former President Trump are not protected by the First Amendment, saying that they were made in, quote, furtherance of criminal activity. And now that judge has rejected Donald Trump's attempt to have his election interference case dismissed in Georgia. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. Steep losses for the U.S. stock market. We are at the lows of the day, and we have got 20 minutes to go ahead of the closing bell. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bailey Lipschultz.
And good afternoon, Charlie. As you said, stocks erased an initial rally and are trading near session lows ahead of jobs data on Friday. The Dow is down 490 points, S&P lower by 55, with the Nasdaq falling 175 points. The U.S. 10-year yield is at 4.31%. Crude oil rose more than 2% to top $87 a barrel for the first time since October, and small caps are down 10 points. All 11 main S&P sectors are trading lower, with tech and healthcare dropping more than 1%, while energy and consumer staples are the best performers. Nasdaq biotechs fall 35, transports drop 1%, semis are down 120 points, while the VIX is higher by 12%. Only Walmart is trading higher among Dow components, while Salesforce, 3M, and American Express are the worst performers. After earnings, Conagra Brands rose on better-than-expected operating margins. Lamb Weston sank 20% after cutting its sales and profit forecasts, and Levi Strauss jumped the most since 2022 after lifting its earnings view. Wrapping things up, HubSpot jumped to the highest since 2021 on a report Alphabet is talking with advisors about a deal. Live from the First Word Breaking News Desk, I'm Bailey Lipschultz. Charlie?
Okay, we thank you very much, Bailey Lipschultz. And to hear live breaking news over your Bloomberg, type SQUAK, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, Jess Minton and Tim Stenovic here, the Bloomberg Interactive Broker Studio, with just under 20 minutes left to go before the closing bell. If you do a quick check here on the S&P 500 and the Nasdaq 100, both down over 1%, so that would be the first time the S&P 500 would see a decline of that magnitude, Tim, in about a month. But I have to also point out, just down about 2% from its all-time high. But who better to check in with the latest on the market movements here heading into the closing bell than Gargi Chowdhury, Chief Investment and Portfolio Strategist for Americas at BlackRock, who's joining us on Zoom in New York City. Thanks so much for joining us ahead of the closing bell here. Break down what you think is sort of turning here in the last hour of trade and why we're seeing stocks give up their early gains from this morning.
Hi there. Good afternoon, Tim and Jess. I think a couple of things that's spooking investors out just a little bit. Number one, I think there was some hawkish comments out from a couple of Fed speakers, just this idea that the Fed may not need to go at all this year. I think that's certainly something just based on the timing of when the market turned. Number one. Number two, and this I think is more important, is the price action in oil prices. Obviously, Brent crude going back significantly, moving significantly higher today. That is something that is adding quote unquote fuel, because there was already this concern around sticky inflation. And now, of course, if you do have oil prices continuing to turn meaningfully higher, if Middle East tensions continue to, get even worse, investors are considering what that might mean for consumers, what that might mean for interest rates, and of course, as a result of those two, what that might mean for investment returns in the stock market.
Yeah, Gargi, when that happened during our 2 o'clock hour on the program, we had Michael McKee on, and he made the point that, well, one, the Fed can't do much at all, if anything, about oil prices, and two, they're much more interested in the second order effects of the way that they move, that a price increase in oil and energy would actually move throughout the economy and mess with their inflation goals of getting inflation down to 2%. Is this move in energy, in your opinion, could this be a sustained move higher?
I think that's the really important question, right? So if this is a move that we experience and then we sort of come back down to levels that we have been in for the last quarter of 2023, I think that's fine, and that's certainly something that both the Fed and the equity market will look through. But if this is something more pernicious, if we are getting back towards that, or even if there's a fear of getting back towards that $100 price oil level, that can be problematic for a couple of reasons. Look, of course, the Fed looks at core PCE. We know that But higher energy prices can make their way into core inflation as well, because as we know, every type of good that you purchase or service that you experience, such as an airline ticket, for example, has an embedded energy cost associated with it. So that is something that we have to consider. So the sustainability of this energy rally is important. The second thing I think is pretty important is the strength of the consumer. So far, growth expectations in the U.S. have been so immensely helpful for earnings growth, as well as, of course, for how consumer sentiment has been. And consumer sentiment is often driven by what consumers are paying at the gas station. I think if that is something that continues to move higher, I think sentiment is going to be definitely driven, and how consumers feel about spending going into the second half of the year, especially if interest rates remain high, can be a concern. Now, I will say that our base case isn't for this to change the Fed's path, but I think the risk has just risen.
It's so interesting that you talk about sentiment, because it's so visceral going and pumping gas, and you know how much you're paying every single time. So that's something that certainly the consumer pays attention to. Hey, I just want to jump in with Redhead crossing the Bloomberg terminal. Thoma Bravo targeting to raise about $20 billion for its next flagship buyout fund, according to people with knowledge of the matter. The tech-focused firm discussing commitments to Thoma Bravo Fund XV1LP with potential investors. That's according to the people who asked not to be identified discussing confidential information.
Okay, Gargi, we're only about 4 trading days into the new quarter, but what are you advising your clients to buy and sell after we obviously saw a big rally around 10% in the S&P 500 in the first quarter?
Sure thing, Jess. I think, we just came out with our Q2 outlook earlier this month. The focus there is for investors to focus on quality in their equity portfolios. So what do I mean by quality? We think that companies that have stable earnings growth, companies that have a lot of free cash flow, and most importantly, have low financial leverage.
What are some of those companies
that are going to, some of those companies are the big tech names that you hear. Some of them are in the healthcare sector, and some of them are in the financial sector. It's really not about the sector or the industry, but it's really very stock specific and focusing on, we think investors can access that through a ticker QUAL, which has some of those companies in it that have those earnings growth, that are screened for higher earnings growth and stable and low financial leverage. So I think that's one way that investors can focus on for the remainder of 2024. I also think that in a world where growth remains solid and inflation, though sticky, is still continuing to come down, and the Fed most likely cuts rates at least 2 times this year, in that world, you want to be focused on earning income within your fixed income portfolio. So again, keeping where you own duration really matters. So keeping that interest rate sensitivity in that 5-year or shorter part of the curve, but earning income in higher quality parts of the fixed income market also make a lot of sense. So I think remain invested, remain up in quality, clip some coupon, focus on sectors like tech as well as financials, if you want to look away from that growth area of the market and look at a little bit of the value areas that we think can still do well, and then clip some coupon in the fixed income markets. That's what we're telling investors to do right now.
We only have about 45 seconds left, but you mentioned financials, which does have not only big banks and regionals, but you do have fintech companies and insurers. Where within financials do you like?
Yeah, so what we're telling investors to do is actually stay, again, in the higher quality part of the financials market. So the ticker that we're recommending investors is IAI, but really focusing on those large banks and brokers where we think the impact of capital markets reopening, the steepening of the yield curve, all of that will come into play. So focus on communication services and quality and tech, but also barbell with financials, but up in quality.
Gargi, we're going to have to leave it there. Thank you so much for joining us this afternoon. Gargi Chowdhury, Chief Investment and Portfolio Strategist, Americas at BlackRock, joining us from New York City. Still seeing some selling into the close, though, off of lows, down 1.05% on the S&P 500, 1.3% on the Dow, the NASDAQ down 1.1%. Coming up next, it's Beyond the Bell, our cross-platform coverage of the market close. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. CVS Health drug plans will cover over-the-counter oral birth control in the U.S., a step that further removes barriers to obtaining oral contraception as reproductive rights increasingly come under fire. CVS Caremark says Opill, that is the non-prescription drug from Perrigo, will be added to the Preventive Services Oral Contraceptives list and will be covered at no cost for many plan sponsors. CVS shares, they're down now by 0.8%. Alphabet is reportedly talking with financial advisors about potentially making an offer for HubSpot. That is an online marketing software company, this according to Reuters. The news service, citing sources, says the Google parent has met in recent days with investment bankers at Morgan Stanley about a potential offer for HubSpot. HubSpot shares are up by 5.1%. Alphabet, parent of Google, down by 2.7%. Such a large transaction would be unusual for a big tech company like Alphabet, as the sector is under heightened scrutiny by antitrust regulators. Ford is delaying the rollout of an electric three-row sport utility vehicle by 3 years, extending the layoff of 2,700 workers in Canada who were set to begin building it in 2025. Ford down 3.3%. Tesla shares, they are up today by 2%. A prominent proxy advisory firm is telling shareholders to vote against Goldman Sachs Group's executive pay plan after the Wall Street giant's top leaders were given lofty raises in a year when profits slumped. And those are some of the top company stories that we have for you at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. Tim Stenevec and Jess Menton in for Carol Master. Today, a Bloomberg red headline crossing the terminal right now. Money market assets hit a record $6.11 trillion in the week leading to April 3rd. That's from ICI. We're talking about the markets, though, because we are seeing quite a reversal from what we saw earlier, Jess Menton. The S&P 500 off its worst levels of the day, but still down more than 1%, as are the Dow and NASDAQ composite. I agree with what Gargi told us. It's kind of the general consensus about what kind of happened here. Hawkish comments from some Fed speakers, Neil Kashkari being among them, essentially saying, okay, well, we might not see any rate cuts this year. And then oil spiking to $90 a barrel.
Right.
Brent crude. What's your takeaway? I mean, we follow this each and every day.
Well, it's interesting because if you look at energy stocks, they actually had been beating technology shares this year. Got a little bit under the radar, but now people are focusing it more now that we've gotten into the second quarter. But not just energy, also the financial sector had been beating the XLK. So that's the ETF that tracks the technology sector in the S&P 500. So when people keep talking about for months and months now, as you know, Tim, the broadening of the breadth, right? And so you're actually starting to see that, even though you're seeing actually, if you look at, we talked about this earlier, chip stocks. So the SOX, the Philadelphia Semiconductor Index, it turned lower today, down about 2%. So I mean, all 11 industry groups in the S&P 500 are lower right now, not surprisingly led lower by technology because those chip makers are housed in that, followed by healthcare and financials. But if you think of some other unloved corners of the market that people weren't paying as close attention to, materials just came off a 10-week winning streak and actually was its best 10-week stretch if you're looking at the XLB, the ETF that tracks it, since it was started in the late 90s. So you are seeing, despite today, you're seeing this sell-off here, you still are seeing improvement in other corners beyond technology too.
One thing that's surprising to me is just the range that we're seeing in trading today. I mean, I'm looking just at the NASDAQ 100 right now, which is down 1.45%, close to worst levels of the day. And it was as high as 1.1% earlier in the session. So, I mean, look at that range.
In the S&P 500, down more than 1%. So that would be on track if it can close at this. Its first 1% decline at least in about a month here, Tim.
Well, that's how things have been going. The things have been moving the other way.
Still jobs tomorrow,
We're actually seeing stocks continue to move lower as we speak right now. Don't go anywhere, because coming up next, we're joined by our Bloomberg TV team for our cross-platform coverage on TV, YouTube, and Quick Take to count you down to the close. Beyond the Bell starts now.
Beyond the Bell Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day on this Thursday, I'm Alex Steele. Alongside Shonali Bassick, we're counting you down to the closing bell, here to help us take us to the bell and beyond with a global simulcast. We're joined now by Scarlett Fu here in TV, Tim Stenovic and Jess Menton joining us over in radio. We're bringing together our Bloomberg television, radio, and YouTube audiences worldwide to parse through the most crucial moments of the trading day. And Tim, you know what? The most crucial points were like the last hour and a half.
Yeah, I completely agree. I think there were two crucial things that just happened in the last 90 minutes. One, some hawkish Fed speak from none other than Neil Kashkari saying, wait a second, we might not get the data that we need in order to justify any rate cuts so far this year. And then, of course, Alex, I mean, well into what you talk about each and every day, the price of a specific commodity, none other than Brent crude, spiking through $90 a barrel for the first time, going all the way back to October. I think that's got investors a little skittish.
And just looking over at the major indexes, heading into the final minute here before the close, the S&P 500 and the NASDAQ 100 both down about 1%. So if the S&P holds on to this, it would be its first 1% decline in about a month, Scarlett.
Yeah, even with the hawkish talk, though, from Neil Kashkari, you would think that that would send yields in the other direction, but you have yields declining. So it really just goes to show how the comments out of Netanyahu really sparked a flight to safety when it comes to bonds and, of course, oil moving up.
I think also what's interesting is where you saw that movement in particular. You saw some really interesting moves in the longer end of the yield curve here, and that has been a really risky place for some place that is supposed to have been safe over the last year and a half or so. So into jobs day, let's see if some of these moves continue.
Yeah, and you have to wonder, too, what is now the pain trade into jobs? Speaking of, that is the closing bell on this Thursday. When you open up tomorrow, we will have those job numbers in hand. We're looking at a negative down day. It was really a sell-off into the close, with the S&P down by about 1.2% as we settle out here. The NASDAQ up by 1.4%, and volume quite heavy, Tim, throughout the day.
Yeah, taking a deeper look into the S&P 500 right now, 75 stocks only in the green today, 428 stocks in the red, Scarlett.
Yeah, and if you look at the IMAP, it's pretty clear. The pie is almost completely red, at least if you look at the 11 sector groups in the S&P 500. There are a few slivers of green. I'll just highlight where they are. Real estate management up by 0.6%. Autos and components up by 0.5%. But you're slicing it really thin when you get to that point. In terms of the big sector decliners, tech off by 1.7%. Healthcare losing 1.4%, along with communication services.
All right, well, let's take a look at how some of the gainers that I kept an eye on actually moved lower in the day. I think they're all going to stay in the green. They certainly are. Meta Platforms is the one I wanted to start with. It was on track for much of the day to close at a new record, but ended up selling off with the rest of the market. Still, shares closing higher by more than 0.8%. It was as high by as much as 4.6% earlier in the session. This after we saw price target increases from Jefferies and RBC. I do want to take a look at shares of Levi Strauss & Company. Okay, this is something I learned, guys. Did you know that baggy jeans and denim skirts are back?
Yeah.
Oh, Tim.
Tim, where have you been? You live in Park Slope.
So
I'm
are white
disappointed.
sneakers.
Dude,
Like,
man.
what is this,
He's so
junior high?
excited.
Like, this is what I wanted to wear in junior high, like the baggy pants my
The
parents
90s
would let
are
me
back.
buy.
90s are so back.
Chokers.
All right.
Love it.
No?
True.
I guess I gotta get on the TikTok and see what the kids are doing these days. Yeah, so actually, denim skirts and baggy jeans really helped Levi Strauss in the most recent quarter, in addition to cost-cutting measures that the company did implement. Shares finishing the day higher by more than 12.3%. Finally, some deal news, potential deal news, we should say, moving shares of HubSpot higher on the day. Reuters did report earlier in the session that Alphabet is talking with financial advisors about potentially making an offer for HubSpot. It's the marketing software company, and it would be valued at roughly $34 billion. Shares of HubSpot closing today just shy of 5%.
Trying to move over from denim skirts and baggy jeans here, but I'm going to point out Fry's producer Lamb Weston, ticker symbol LW on this. It's down 19% today to the close. This is its worst percentage drop on record. If you do look at this, its quarterly sales did meet Wall Street expectations. It also cut its fiscal year sales and profit forecast, so you're seeing that stock very under pressure today. Another one I have to point out is Hertz Global, HTZ is the ticker symbol on this. So Goldman Sachs ended up cutting its rating trading on the stock to sell from neutral. But the broker also raised its recommendation on its rival Avis from neutral to sell. So you are seeing that stock under pressure as well. But you do see Avis actually turning higher today based on that. And then lastly, I'm going to take a look at Block. So obviously we know this is a payments company. Morgan Stanley did cut its recommendation on shares to underweight from equal weight. It did say the downgrade did reflect limited additional opportunity for the company's Cash App to expand its banking credit services. Shanali.
Yeah, I want to talk about the bond market now because it was one of those days that the bond market was really wagging the tail here. And you had the bigger moves actually not even on the shorter end of the yield curve. The 2-year yield down by about 3 basis points to 464, but you saw about 4 basis point moves or more on the longer ends of the curve. 430 on the 10-year now, 20-year 457, 30-year at 446. So a bit of a haven trade at a place of the market that's been seen as a little riskier these days.
So moving ahead, you got to wonder what's going to drive the market more. Is it going to be Fed speak or is it going to be comments out of the Middle East with regard to what could move oil prices?
Yeah, I think that's a really good question. I think tomorrow the focus is on jobs and, what kind of surprise we get would actually spook markets. I think it would have to be a really big surprise, either the upside or the downside, Alex.
Yes.
I don't see, given that we got some hotter than expected numbers over the last couple of months, and it didn't really move things in terms of the way that investors were thinking about rate cuts. But what I do think is interesting is sort of the change in tune that we got from Kashkari earlier today.
Yeah, I was definitely focused on Kashkari. However, Halima Croft over to RBC had a note out that was quite worrisome this morning. She was saying that there's a risk that Iran's going to have a more serious response and then target Israeli leaders more directly, and that could be a material risk and really move up the ladder in terms of geopolitical problems, and that's going to be huge. But it's hard to price that in. Maybe you can do that a little bit with oil, but it's hard to price in those exogenous events. So then you have to go wind up looking for just the jobs number and Kashkari and looking for maybe no cuts and go that way.
Of course, also keeping a close eye on the bond market. To Shanali's point, at a certain point earlier this week, you saw the 10-year Treasury yield move about 20 basis higher from where it had ended last week. Obviously, it's come off from that. It's around 430 at this point. But even just looking at today's sell-off, Alex and I were actually chatting about this yesterday. It's been about 281 trading sessions since the last time the S&P 500 actually saw a 2% decline. So that was a little over a year ago. So even with today's sell-off, and it's down more than 1%, that's its biggest loss in about a month there.
Well, we spent quite a bit of time this week talking about the new minimum wage law in California, which saw an increase of 25% for a minimum wage from $16 to $20 an hour. And as a result, we've seen some companies raise prices. We've seen a lot of companies try to figure out, okay, how can we make things more efficient? You have one fast casual chain based in Guatemala but has restaurants here in New York, a fried chicken chain. It's called Pollo Campero. I don't know if you guys have ever been there, but what they're doing is they're redesigning their stores to make it more efficient for the people who work there. So they're actually, instead of walking 18,000 steps in a single day, which is more than 3 miles, I'm shocked that people who work in fast food are walking that much. That's just so much to walk, down to 9,000 steps a day, and it's saving time, and of course it's saving on labor.
Wow, this is an amazing story here, and just seeing in general what it could mean for those particular label costs here. But actually, Tim and I were speaking with an executive from Verizon earlier, just talking about how they're implementing when it comes to AI in their technology and what it could mean when it comes to labor productivity, but then also customer service and what that could basically mean as far as making things more efficient. But then also he was actually telling Tim and I that most of their customers, some of their top questions are they don't necessarily want it to dramatically to everything move to AI because they still want to talk to customer service representatives.
Absolutely. Have you been to places where you can order through kiosks? Most of them don't work half the time, and then you have to get in line anyway to talk to the person, except that person is overworked, no matter if they're taking 19,000 steps or 9,000 steps.
Yes, 100% preach. Totally agree with you. But I think it also points to the fact that revamping kitchen restaurants is really hard. This is why it was so hard for McDonald's to do any kind of all-day breakfast thing, because it's not as simple as flip the burger here, do the eggs over here.
Did it take years for them to roll it out across the entire company?
Yeah, no, it took a really long time because it's super complicated. So I thought that kind of choreography was quite different. But I also wonder if they can't increase costs and if prices keep rising and the productivity gains kind of wear out, then do they have to lay people off? What's the next trigger that they can pull?
Certainly dealing with macro challenges as well as consumer preferences changing. Speaking of consumer preferences, hard pivot. Did you know, guys, that Kiss is selling its music catalog here to a firm that is trying to use that brand and make it last through the generations. I wanted to talk about this story because, Tim, just like those jeans that you were talking about, you might not know that my 9-year-old niece actually has Kiss as her favorite artist.
Really?
So that is another one.
Not Tay Tay?
Is that like a
Isn't
normal
that amazing?
thing?
9 years old.
A 9-year-old?
You know, you have to go to Brooklyn and see if the rest of the school thinks so. But like at the same time,
lives in Brooklyn.
it is, you can see how you can keep making money off a brand like this and why, frankly, this is a really hot new private equity play, frankly.
Yeah, I mean, it's just the latest in a line of singers and songwriters selling various portions of their catalog for many hundreds of millions of dollars.
I would argue that Kiss's
IP.
name, image, and likeness is more valuable than its song catalog. Can you name a Kiss song?
No, I actually
but I know exactly what Gene Simmons and everyone look like, right? Yeah.
Exactly.
All right, guys, that is going to do it for our cross-platform coverage of today's market close. But don't go anywhere because Bloomberg TV continues its coverage, as do we here on Bloomberg Radio and Bloomberg Originals. Meantime, catch us same time, same place tomorrow. Happy Almost Friday, everyone.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. That's Jess Menton. I'm Tim Stenevec. Jess in for Carol Masser this afternoon. So some good news and bad news when it comes to retirement. More employers than ever offer retirement benefits, and automatic enrollment has increased worker participation and improved how investments are made. So today's Americans actually have more money saved than previous generations. That's the good news. The bad news is we're not really thinking about the right goals when it comes to saving for retirement. Our next guest says that the goal of retirement plans should be providing income to those no longer working, not accumulating wealth for those who still are. Allison Schrager is a senior fellow at the Manhattan Institute, as well as a columnist for Bloomberg Opinion. She joins us from New York City. Her column today, among the most read stories on the Bloomberg terminal. So, Allison, I want a little help making this distinction here, because isn't the whole idea of building wealth ahead of retirement so that when you do get to retirement, you can then reliably sell assets each year to live off of?
Yeah, well, I mean, they're definitely related. The more wealth you have in retirement, obviously, the more income you have in retirement. But really, when you think about your asset strategy, investing for, okay, I have a big pile of money 20 years from now versus I will have regular, consistent payments for, I don't know, my entire lifetime, the rest of my lifetime 20 years from now, are actually two very different objectives that do require slightly different sort of asset allocation strategies. I mean, this is actually, I think I mentioned, defined benefit plans when they were around years ago, at least the good ones, did manage wealth for income rather than just like a pile of money in one day.
Talk to us about the retirement plans in general when it comes into the U.S. So many people that obviously went through the pandemic and were hit really hard there and potentially lost their job, maybe struggling to still get one. Walk us through sort of what is out there and some of the issues people still have trying to get access to retirement plans.
Well, the access is pretty good, particularly if you do have a full-time salary job. You know, for a long time, for smaller firms, it was rare to have a defined contribution plan like a 401k because it was just very expensive. I think I do mention the story. A lot of the issues we have with retirement are various administrative things that make things very expensive or very rigid. So various Secure Acts, we're now on our second one, did a lot to make that a lot easier. So more people than ever do have access to retirement plans, and even some states offer them to various people. So at this point, like most people who have like a reasonably high middle income do have access to retirement plans. It's mainly lower income people or people in part-time jobs who don't have them.
Yeah, we're going to be speaking with a company that's creating a platform for gig economy workers, and there was some interesting story this week about gig workers in Pennsylvania actually getting access to retirement benefits. So we're going to talk about that a little later. Hey, Allison, there's this third rail in politics when it comes to Social Security and when it comes to retirement that really no politician is going to want to touch. And that's the idea of, now that we're living longer as Americans, potentially retiring later. How does that factor into the calculation here?
Well, I mean, if you still are going to retire at the same age, but you live longer, you're just going to have more years of retirement to finance. And that just makes the problem a lot harder. So it's unfortunate. I mean, people who are against raising the retirement age, and that seems to be most people lately, do point out that some people do work physically demanding jobs and they don't have the option of working longer. And that is totally true. But it seems to me that we can't say, well, because some people can't work longer, everyone gets to retire early or should be encouraged to retire early. It seems that, we do have programs or could expand the existing programs to cover people who physically can't work beyond 62 or 65 and still have more carrots and sticks to encourage everyone else to work later. I think the bigger issue, if I think about working into your 60s and 70s, that we think about it as this binary. Like you're working, then one day you're full-time, and then one day you're retired. As opposed to, I think it's a lot healthier, and we're starting to see more trends of people trying to do this. So it'd be great if we had more support for this, of people working maybe part-time, maybe scaling back their jobs a bit, maybe only doing tasks that sort of still suit them, and sort of do a more gradual withdrawal from the labor force rather than just this binary, I'm working, now I'm not.
Something that I've always thought was interesting is just the financial literacy issues when it comes to retirement planning and kind of the lack of schooling, whether it's in high school or even colleges, for people to kind of have access. I mean, as you know, Tim, you use money for the rest of your life and you have to use these types of financial decisions. So I'm kind of wondering, through your reporting, what you've sort of learned and maybe some of the holes, because each state has different laws for how they go about doing this with their curriculum, but kind of wondering, how do we give people kind of more access to the information that they need? Because some people might have access to a retirement plan through their employer, but a lot of times they still have a lot of questions and don't really understand the types of allocations they really need to be using at a particular juncture in their life.
Yeah, I mean, I found in various jobs, and so I'm an expert in this. I've done this my whole life. I did my PhD in this, so I still find it very confusing when you are signed up for a retirement plan. I'm not sure if sort of financial literacy programs in high school, are going to be able to explain this well, considering even most 401k administrators make the problem a lot more confusing than it does. But I think people do need to understand the basics, like compound interest. Obviously, that's helpful, but also thinking about different reasons you're saving and the trade-offs there. I think, an issue we do have with retirement accounts is a lot of people sort of don't really think through the fact that they're illiquid, and then, they don't have other forms of saving. There is evidence that retirement displaces more liquid forms of saving. Some people don't have a lot of saving otherwise, so they end up in a sort of bad financial situation, end up drawing down, maybe paying penalties, not realizing they have a tax liability. So I think we do need to sort of really just maybe educate people, make advice certainly more accessible, and find ways to make it more affordable for more people, so they can understand, really a more holistic saving strategy that is just not just about retirement, but all areas of life.
Hey, Allison, I have so many questions for you because you are a retirement economist. You did your PhD in this. And, even I find myself Googling, like, at my age, how much should I have saved for retirement? And there are different answers everywhere. I think a lot of it has to do with, like, we're trying to make assumptions here. And there are a lot of things that are out of our control. And we don't know how long we're all going to live. So there's a lot of unknowns out there. But what about something like target date funds? That was supposed to simplify everything. How would you design the system differently?
Well, I mean, I think retirement date funds were an improvement on what we had before, but I think they are fundamentally flawed in that they're very wealth oriented. The idea is, be in a lot of stocks when you're young, which does make sense, particularly when most of your assets are still your future earnings and not your wealth. And then as you get older, you move more into bonds. So the idea is that your portfolio doesn't move around quite as much. But that's thinking about wealth, not income. So I think it would be better if we put these terms and judge different funds based on income goals and saying, okay, this is how much income this could get you, and where are you relative to that goal now? I mean, that's the way defined benefit plans used to operate, and there's no reason why we couldn't do that on an individual basis too. But it really takes a rethink of benchmarks and how we assess goals and how people pick funds.
We only have about 30 seconds left, but you talk about how America needs to start thinking more creatively about work. How do we get there?
Well, I think it starts with education. I think we set people up to fail by sort of not educating well about income. We just sort of like, here's this pile of money, figure out how to make it work, or, you know, you're going to work and then one day you're not going to work. And instead we should be thinking a more integrated approach, and to think about sort of different ways you can assess your work. Andrew Scott has a great book on this that just came out, of how to sort of change how you see work throughout your lifetime, really, even if you live to 100.
Allison, we're going to have to leave it there. Love it when you join us. Thank you so much. As I mentioned, Allison Schrager, a Bloomberg opinion columnist, also senior fellow at the Manhattan Institute. She's a retirement economist. Her story, her column today, among the most read on the Bloomberg terminal. You're listening and watching Bloomberg Business Week, and this is Bloomberg.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
Welcome to the digital age. Are you struggling to stand out here? Don't worry, meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need. Like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
my general advice is continue to seek out companies or people that are maybe one stage or two stage ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down the path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. Almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
for consumers, what that investment returns in the stock market.
Paramount Global lower today by 8.5% as investors digested reports that the media company is getting closer to a deal to merge with Skydance Media. Analysts are expressing some questions over a potential deal. Yesterday, you recall the stock rallied 15%. Today, Paramount Global down by 8.5%. Recapping, stocks lower. S&P down 64, now at 51.47, down 1.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Tim Stanovic, live here in our Bloomberg Interactive
what were you doing earlier today?
Bloomberg studio.
You were gone. What were you doing?
I did. I stepped away for an hour. We're going to hopefully bring the conversation I had at Bloomberg Intelligence hosted an event, and it was called Generative AI, Next Steps in Evolution. And it was really looking at, all the things we've been talking about over the last year and a half, and some great high-level conversations about what it really means in terms of equipment, software, services, enterprise systems, a lot of really smart conversations.
Well, we got one of the folks here who was involved in one of those smart conversations just moments ago. Alice Steinglass is an executive vice president over at Salesforce. She's here in our Bloomberg Interactive Brokers studio. The panel that you were on today, Alice, was the role of data in making Gen AI enterprise ready, which we'll talk about in a few minutes. But I just want to start big picture here. And I just want you to talk a little bit about how you use AI in your role, because we've been talking about AI for a long time. And I know you've been probably thinking about AI for longer than we've been talking about it. But how are you using it in your role?
So we're all using AI all of the time, right? And this is because AI's been around longer than we think. Salesforce rolled out our predictive AI in 2016. Today, we do over 1 trillion predictions every single week with AI, right? It's embedded in all of these decision points we make. So within Salesforce, things like, hey, which account should I look at? What's the next best action I should take? How do I know where to go with like service or sales? What's new and what really changed was generative AI, which came on the scene a little over a year ago, right, and has opened up a bunch of new capabilities that we can use to generate text, but it can do more than generate text. It can generate campaigns, it can generate code, it can generate flows, which are automations. And so we're using AI across the board in every part of our business.
But what you generate is only as good as maybe the software you're using, the systems you're using, the reliable data that's going into it. So talk to us about that, because it's not so easy as just doing it.
You're absolutely right. It starts with the data, right? If I asked you, if I said, hey, can you write me a campaign brief? And I didn't tell you what it was for, right? And I didn't tell you who that customer was. You wouldn't write me a very good campaign.
Terrible.
It'd be terrible, right? And so it's exactly the same thing as working with a person. It needs to know who is your customer. It needs to know, what is that customer like? What should I recommend to that customer, right? All of that information, that your business data, is core to using an AI in an enterprise.
So to what extent do we, using the collective we, have to make sure that we, or I guess train ourselves to act differently or interact differently with this technology? Like, what do we need to know and what do we need to do differently?
So what we want to do at Salesforce is make it so it works for you and everybody doesn't need to do it, right? We don't all need to know how to talk to computers.
I'm talking about like the idea of a prompt engineer.
Yeah. Oh yeah, so we don't all need to be prompt engineers. And actually, that is one of the challenges when AI first rolled out, right? People were like, okay, I'm just gonna expose this. I was talking to one company, and they had every single salesperson was supposed to copy and paste the prompts from a spreadsheet into the like, their version of their AI, and then ground it with the right data. So then put in, okay, I'm gonna generate a sales email. Who is that person? Who am I supposed to send it to, right? They didn't get great uptake, but you know why, right? Because every single salesperson having to do, they're not going to do it, right? We're not all prompt engineers. So what we're doing at Salesforce is we're making it easy to roll this out in an enterprise way across your organization, right? There should be a person who's doing that prompt engineering for that sales team, who's thinking about, what data do I want to put in my sales emails? What's the tone for my company? What is, what kind of information do I need to put in here? And then just roll it out as part of the course of work so it's actioned in the workflow. So the sales engineer at the end of the day, not the engineer, sorry, the sales rep at the end of the day just hits a button to generate an email. And then they can edit it, use it, not use it.
Alice, I'm always curious about, and you guys have tons of different kinds of customers. What are customers asking you specifically about Gen AI and what they need to be actually able to do? Because I think this is something, we all talk about it, and there's ChatGPT, and you ask it to write something about your friend the other day, and Matt Miller uses it to do XYZ, or anything in his world, right? But what is it that customers are specifically asking so that we understand, like, how does generative AI impact our personal lives and our professional lives?
I think in the enterprise space, in the fun space, I don't know, we're generating poems and songs, I don't even know.
Pictures,
In enterprise, what people are looking to do is they're looking to do two things. One is to improve productivity by automating the things that we waste our time on, right? Just take the tasks that take a lot of time and make them faster. The other thing that they're looking to do is to take the things that we do and make them better so that they can improve their sales rates, so they can improve their service responses. And the main way it can do that is by making it more personal, right? So I was talking to a company that was doing sales emails, and their reps were sending basically the same email subject lines to every customer just because it's a pain in the neck to go look up who is that customer, right? And what am I actually going to sell specifically to that
No customization there?
You know, they could have, but they weren't, right? Yeah. And so this is Baca Systems, and so I was talking to Andrew, who's their admin there, and he said, you know what I did? I used the AI to generate personalized subject lines for every email, and the response rates went up 2x, right? And so what that did was it improved, it improved that because it saved them a little bit of time, right? I don't have to look up who is this customer and what exactly do I want to put in. And it made it better. It made it more personalized. And that magnifies a subject line is so small.
Right?
Yeah.
So in your experience and in the work that you're describing, what are the jobs that are eliminated?
I think it makes all of us faster. It makes us better at our jobs. And it allows us to spend our time on the more high value parts of our job. So I think about, like, my team's technology. I come from a technology background. Software development is getting a major change. App development is changing in a dramatic way due to AI. But it's not that we're getting rid of developers. What we're doing is we're making the job a lot more fun because I can spend more time thinking about what it is I want to build and less time doing things like writing 50,000 test cases for it, right? And I can think at a higher level. I'm more productive. I'm able to do more. And I think we see that same thing across the board in a lot of jobs. There's pieces of every job where, probably even in your job, there are pieces that you're like, hey, wouldn't it be great if I had an assistant?
We talk about it all the time for writing certain things that either we don't get time to do or just to help us in doing some of like a script every day and then being able to focus on some other things.
Exactly.
So I get it. It's pretty cool stuff.
Why is the control room laughing? Am I the assistant?
No, equal footing. Alice, thanks so much for stopping by.
Yeah, thank you for having me.
And being part of the Bloomberg Intelligence event earlier today. Executive Vice President, General Manager at Salesforce, joining us here in our Bloomberg Interactive Broker Studio. I'm Carol Massar along with Tim Stanovic, and you're not my assistant. You're not anybody's assistant. This is
ChatGPT.
Wouldn't be so bad.
Oh.
your company news headlines on Bloomberg Radio.
My general advice is continue to seek out companies or people that are maybe one stage or two stage ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down that path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
When I was younger, I used to be in bands. I'd play drums in bands and toured America with them. Did a lot of session drumming, recorded albums. So yeah, it was good fun doing the drumming. The reason I stopped it, well, I still play, but not as serious as I did when I was younger. But drumming doesn't pay the bills. I was never good enough to be able to pay the bills with it, but it was good fun. I started RJF, and the reason I started it was I saw a gap in the market for particular early stage and startup businesses. With the experience that I've got of running businesses, of being a finance director at the very biggest companies in the world to being finance director of small startups, we were looking at providing more than just basic accountancy services. So yes, we'll do all that. We'll do all the basic, all the statutory side of things that you need to do. But there's so much more value that we can add, and I wanted to have my experience to help these startups, because a lot of them don't really know where to go. You can go to your high street accountants and they can do a good job compliance-wise, but you would question whether they've actually been in the fire line of a business. Have you been in a business where you're thinking, how do I pay wages next week? Or business is really successful, what do we do with it next? Or how do we grow it? How do we grow into international territories? Or how do we grow our markets? How do we expand? So a lot of the experience I've seen over the years and seen different types of business in different sectors, I thought, well, it's a real value that I can add to these businesses as opposed to just being an FD, because a lot of these businesses can't afford an FD. But if we can take care of their statutory side of things, the compliance side of things, I'm on hand to be able to help and advise businesses with their growth strategy, or if they're in difficulty, help them through these times.
Having said that, man, when I walked away...
Oh, yeah, we were in the green.
We were in the green in terms of the equity trade.
Yeah.
And we've seen yields come down. We've seen stocks come down. And so a lot of things going on. You were, kind of filling me in. Like we had oil certainly moving up, a spike. If I look at, first of all, the IMAP function on the Bloomberg, on the S&P 500.
It's a lot of red, right?
Everything except automobiles and components.
Yeah, I think 45,
But
basically, only 45 stocks in the S&P 500 were in the green today.
And I think what's really interesting, and I think
72 actually, excuse me.
this is something we've been talking about since the end of last year, certainly, I feel like for the last year, and certainly here in 2024, geopolitical concerns. And here you have Israeli Prime Minister Benjamin Netanyahu saying at a security cabinet meeting that his country will operate against Iran and its proxies and will hurt those who seek to harm it. President Biden telling Netanyahu on a call that U.S. support for his war would depend on new steps to protect civilians. I know Amy just kind of breaking this down, but that is something that could worry investors, and you saw it play out there.
Yeah, so, we talked to Mike McKee when we saw oil move to 90, and he made an interesting comment.
You saw the headline and you asked him.
Well, it was an interesting comment that he made, which is, okay, look, obviously it's out of the Fed's control, but what they do care about is the second order effects of rise in energy prices. So not necessarily the price that people are paying at the gas pump, which, yes, is important. It's visceral. It's something that people have when they think about, how much money something is going to cost. But where it really hits the Fed's measure of inflation is when those transportation costs for goods increase, when services costs increase as a result of energy prices moving higher.
Yeah, think about if you're a company, first of all, you have to move stuff around. All of those transportation or logistical costs, they're going to cost more. If you have an input cost that is either petroleum or energy based, that's going to go up. And so either you eat that cost and you chip away at your margins, or you pass it on. And then all of that can help pull down economic growth, which has been rising.
We'll see tomorrow with the jobs report.
Yeah.
If it's a miss on the downside, or if it's a huge beat, that could move things.
Healthy U.S. employment gains likely continued in March, while wage growth moderated. That's according to a Bloomberg survey of economists. We will see that at 8:30 a.m. Eastern. All right, guys, that's going to do it for Tim and me. Have a great and safe weekend for the whole Bloomberg Business Week team. Take care. Right now, Balance of Power starts right now.